Here's the thing, the secret is out. That's what locals like to say about San Diego County, because for a long time we were kind of held under the radar a little bit as compared to other California metros. Other California metros with less desirable weather and more polarizing politics. Places like Los Angeles, San Francisco, and to a lesser extent, Orange County as well. But now everybody knows San Diego is one of the most desirable places to live in the entire world. And that's driving the cost of living up, and it's making it more and more challenging to be able to secure a home. My name is Dan Parker with the Best Life Home Team, your San Diego real estate resource. And I'm going to tell you why we have we have the most challenging housing market across the country right now, which I can prove to you here in a second. And I'm going to show you exactly what you need to know to win in this market. And real quick, if anyone is currently buying a house or has just recently bought a house, I'd love to know about your experience. Share with us down in the comments below so other people can learn from you as well. So to show you exactly what I'm talking about, there's this article that was just posted by the San Diego Union Tribune saying San Diego home prices rising the fastest in the nation. And so this is a time where it's challenging to buy a home all over the country. It's challenging. It's not easy. The amount of homes for sale is very low. Mortgage rates are very high, making affordability more and more challenging for the everyday American, the everyday person looking to purchase a house. So it's a very tough market, fewer transactions. In this market, what I think a lot of people expected is home values to come down, but actually across the entire nation, we saw home values rise. And in San Diego County, we actually saw home values rise more than anywhere else. So in this article, it goes on to say that this was the worst year for home sales in San Diego County in 2023. And when they're saying worst year for home sales, what they're talking about is the total number of sales, which I'm going to show you here in a second. There were 26,910 homes sold last year, which for the record is fewer homes sold than the total number of real estate agents in San Diego County, which is somewhere around 30,000 real estate agents. So it's much lower than other comparably slow years. So they're comparing to 1995, and then of course in 2008, where we had a housing market crash where the total number of home sales was 34,000. So 2003 actually had fewer total transactions than those other years throughout San Diego's history. So let me show you a little bit more about closed sales and how that's affected the market and brought us to where we're at today. So if you look at this chart here, San Diego County closed sales from the year 2000 to the end of 2023 or the beginning of 2024, however you want to look at it. We had the housing market crash of 2007 and 2008 right here. And you can see total number of sales got down to 1,500 home sales during the crash. This last year was right around the same. You can see just how many fewer homes were sold. Last year in 2023, the average number of homes sold per month was 1,750. And if we look at the time between the housing market crash to 2023, the average number of homes sold was 3,000. So this is the stark reality of the market. We have way fewer homes for sale, way fewer people selling homes. And that is the number one reason where we're in a market where demand is down a lot, and yet home values increased by 8.8%. Let me just break this down. Why is this happening? Why do we have so few homes for sale, and why are home values still increasing in this type of market? And the biggest reason, it just goes back to supply and demand. Demand is at nearly an all-time low, but here's the reality. There's always going to be a certain percentage, a certain number of people that have a necessity to buy. It's not a want to buy. They need to buy. They feel the need to buy. They feel compelled to buy. Whether they're moving here, they need to upsize, they need to downsize. There's always going to be a certain number of people that need to sell. And because the amount of new construction homes in San Diego County or across the country is at an all-time low, and because people are staying in their houses for, on average, twice as long as they were 10 years ago, both of these factors are leading to a really compressed market where there is this pent-up demand and just not enough homes for sale, driving the prices up and up. A lot of people aren't selling just because they're sitting on a 2.5% or 3% mortgage rate, and they're looking at buying another house thinking that is impossible. It's going to be significantly higher mortgage payment when you're looking at property taxes and the interest rate. It's going to be potentially 50% to 100% more expensive, even if they sell a house for the same price that they're going to buy another property. And I can tell you anecdotally, myself and my team, we are very active in this market. And so what we're seeing, so first of all, what you have to realize is a lot of this data is outdated. So we're looking at the home values in December of 2022 versus December of 2023. Home values is based off of closed sales, which means they had an accepted offer probably about a month before that. So we're looking at what was the interest level in homes in November of 2023. Now we're in March of 2024. So there are a couple of months have gone by since then. And I have to tell you, the market has heated up pretty considerably from where we ended off at the end of last year. And as far as our clients that are looking for homes, on average, what we've seen this year, especially for single family properties that are very competitive, we're seeing about 8 competing offers. So if you're putting an offer on a house that was just listed that week and is listed, not overpriced, on average, we're seeing about 8 other offers that we are competing against, which makes it a tough market if you're looking to buy a house right now. Don't get me wrong, that's not every single house, but that's the average. That means there are some homes that are getting 20 or 30 offers. There are some homes that are getting no offers. It depends a lot on where the house is located, how much of a demand that neighborhood and that specific location is, and how well is that property priced. Is it way overpriced? Is it way underpriced? So the actual market value is what's going to come through at the end of the day. There is some good news in here. It's not all doom and gloom. And if you are considering buying a house, I can tell you, for example, we've helped 13 people get under contract for a new property so far this year. And that means on average, a lot of these clients, they have 8 competing offers. So they've actually been able to get their offers accepted. It's possible to get your offers accepted. It's not all doom and gloom. And there are some good signs that are coming. The first good sign is that we are still expecting interest rates to come down the second half of this year. So the Fed Reserve has hinted at 3 to 5 rate cuts this year, although it seems like the timing of those rate cuts keep getting pushed back a little bit more. So we're looking at, it's probably not going to happen before May, but the second half of the year, we are still expecting the interest rates to start to come down. The Fed, when they reduce their Fed funds rate, it is also going to have an impact on the mortgage interest rates. They're not directly correlated, but as soon as we start to see that happen, rates will come down. So second half of the year, I can't guarantee it, but it's pretty darn close to a guarantee that we are going to see that happen, which means more affordability for you as a home buyer. What that also means is between that and between the normal seasonality of things, we should start seeing more and more homes starting to hit the market. So a lot of those buyers, or a lot of those potential sellers out there that are sitting in their homes that really need to downsize, that really need to upsize, that really want to move to a single story, that really want to move to another area and relocate, that have been waiting because they feel locked in from their interest rate being so high. Number one, they're starting to get more and more used to those interest rates. And number two, once they start to see those rates come down, then we're going to see more and more people start to sell their homes, which is good. Now, the flip side of this coin, when we're looking at mortgage rates starting to come down by the second half of the year, is that my hesitation is, I don't want you to think that means, all right, cool, I'm going to wait until the rates come down so that I can afford more. Sure, there are definitely some people that are in that situation, but there are actually a lot of people that are in that situation. So what we could potentially see happen, what seems to be very likely, is if we see mortgage rates start to come down, if affordability starts to go up, there's a lot of pent-up demand. There are a lot of people sitting on the sidelines that are ready to jump back into the market. So that means more competition. What I'm recommending, what a lot of my clients are doing, is they're buying a house today. They're actively looking for a home today in this market. And with the expectation, or the hope, I guess is maybe a better word to say, that they are going to be able to refinance in the next 6 months to 18 months, somewhere within that range. A lot of us, we have the expectation we're probably going to refinance down the line. Now, caveat is you can't lean on that. You can't look at that and say, yes, 100% certain this is going to happen. This is the only way we can afford a house. My recommendation is you buy a house that you know that you can afford, may feel a little bit uncomfortable, but more than likely you'll be able to loosen up that budget a little bit when you refinance and gain back several $100s a month, potentially even over $1,000 a month if we see rates come down into the mid to low fives. Here's why all of this is important to you. There are challenges with this market. It's specific challenges with this market. And if you have any consideration in buying a house, you have to make sure to have market awareness, know what's going on a week-to-week basis, and have strategic planning to what exactly and how you are going to achieve the goals of finding that house that you are looking for. You can't just walk into this market with no plan at all. If you have a plan, if you're aware of what's going on in the market, then you can use that to your advantage and strategize offers that are going to get accepted so that you're not sitting around being one of, or 7 out of the 8 offers on a property that gets rejected time and time again. It's exhausting. Nobody wants that. And if that sounds interesting to you, but you're saying, Dan, how do I do that? My team and I, we would love to help you out. You can check out our discovery session. You can book time right directly on my calendar, and we can go through this whole process, help you find the right neighborhood, and strategize how are we going to make this work and find you the perfect house in this market. If you still want to buy a house, but you want to avoid the bidding wars altogether, new construction might be the better option for you. There are new developments in San Diego, although quite limited. In fact, I toured 4 of those developments right here, so you can see a full vlog tour of several different developments that are really, really great. Or you can reach out to us directly and we can help you through that entire process. Thanks for watching. We'll see you on the next one.